Hi everyone. In this example, we're going to solve a problem dealing with a lump sum purchase of some equipment and depreciation related to those items. Now, the problem appears in yellow before you. Xavier makes a lump sum purchase of assets on the first day of the year, 2005, for a total price of $787,500. The items included in the purchase and their estimated values are given. Okay, what we first want to do is prepare a table showing how we would allocate that lump sum purchase to the assets that we've acquired, and then prepare the journal entry to record that purchase. So let's just determine what's the percent of the total based on the appraised value or the estimate. And I want to change this to be estimate value. And we know that this cell will be equal to that cell divided by that cell. If I hit the F4 key, we get the absolute value, so that I can copy that right on down. If I sum that, that should equal 100%, which it does. And I can format this with a double line, and I know you can't see me using the toolbar that does the formatting. Okay, so then once we have that, we have a reasonable basis to come up with an apportioned cost amount. And we can then take the $787,000 value and figure out the apportioned cost based on that value. So why don't I just drop in the total price here. We'll just put it down right here. We'll format that as currency to make this easy. Oh, hit the wrong button, sorry. And now we can take that cell using the absolute value, which you can quickly do with the F4 key, and multiply it times that percentage. We copy those down, sum the answer, we should equal the same number we do, so we know we've done it correctly. And now I can format this cell this way. And we've done the work. Now I'm just going to turn, I think that's fine. Right there we see the apportioned cost. You see I really didn't need to put this cell in there, but I did use it so that we could make sure it rounded correctly. And it certainly did. So we've calculated the apportioned cost. Now let's make the journal entry. Now rather than me keying the debits and credits, what I do is I've prepared it off the page, and I'll just slide that over so you can see it. Okay, everyone? So once we have our apportioned cost, we use those values to record the dollar amounts in the various accounts we need to put on the books. And since we paid cash, the credit would be to cash in the total purchase amount of $787,500. Okay, now let's tackle another question related to this one. Let's compute the depreciation expense for the year 2005 on the building using the straight line method. And we're going to assume that there's a 15-year life and a $25,650 salvage value. Now, the way we would go about computing that depreciation just appears on the screen. We would take the $378,000, the apportioned cost assigned to building. You see that in cell H8 above. We would subtract out the residual value or salvage value of $25,650, And once we have that amount, which I call the depreciable base, we divide it by 15 years, and we come up with the depreciation amount of $23,490. Now let's tackle one other part of this problem. Let's ask the question, let's compute depreciation expense for year 2005 on the land improvements, but let's assume a 5-year life, and in this case we're using double declining balance. Okay, now in this part of the problem we are going to use the land improvements amount. That's the $39,375 you see in cell H10 right there. Okay, and with double declining balance we don't consider any residual value. We simply take the straight line rate, which would be the apportioned cost, or the cost assigned to whatever asset we're using under a double declining balance method, divided by the number of years of its life. That gives us the straight line method. It excludes any residual now. That's the way you approach it if you're using the double declining method. Multiply it times 2 to come up with the doubling effect, and what we come up with is 2/5 is a 40% rate. You guys all understand that? So if we take that 39,000 times 40%, we wind up with depreciation for the full year of 2005 of $15,750. And that's what I wanted to cover in this demonstration.